Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's August 16th. Hope you guys are having a wonderful day, and I'm back. I'm finally back. Took about 2 weeks off if you didn't, which is why I haven't created these daily market reports. But I am back, and we'll get started here. We'll start off with a weekly jobless claims for the month of, or for this last week. So, excuse me, this comes out every Thursday. And last week's was revised from 213 to 214,000 new jobs. Or I'm sorry, not new jobs, but people applying for unemployment. The forecast for this week was 215, and it actually dipped by 2,000 down to 212,000 people applying for unemployment. These are very strong numbers here. We're showing that how tight the labor market is. Employers are trying to retain their employees because there's more jobs available than there are actually people participating in the labor force here. And at some point, we're going to keep these, retain these employees, we're going to probably start seeing some wage-based inflation probably coming up in the near future as well. Also, we got on the news some housing data here, and we'll start off with the housing starts for the month of July. So June was revised a little bit lower, actually. So this is we had a 1.158 million annualized starts for the year. So it came in at 1.158. It was supposed to go up to 1.27. It only went up pretty minuscule, up to 1.168 million. So obviously not great news. It was much lower than expectations. However, on the positive side, we have the building permits for the month of July. So in June, this was actually revised higher, and we had 1.292, and it came in at 1.311 million. So on the on the current standpoint, it looked about a little negative, but when you look at the future of housing starts with these building permits, it's a little bit more positive, and it's kind of balancing itself out here. Also, we got the Philly Fed Index here. This is the manufacturing in the Philadelphia region for the month of August. In July, we had a nice reading of 25.7, and it came in a little disappointing here in August. This is about nearly a two-year low for this reading here. It came in at 11.9. Still in positive territory, but much lower than we expected. And a lot of this could be placed on the tariff talk we've been we've been hearing a lot about with the European and the China and Turkey. Even since I've been gone, there's been a lot of talk about Turkey of late with their currency issues and such. So let's kind of move on here. And headline news: stock market is up. The Dow's actually rebounded quite nicely from yesterday's lows. If you were paying attention to the stock market yesterday, stock market was much lower than it was, and it rebounded. It closed off of its lows, and which is what you'll see how it affected the bond market here shortly. But today, so far this morning, Dow is up over 400. It's taken its place from Q2 earnings, which is really kind of helping things out. In that regards, Walmart kind of set the tone with their better than expected return or better than expected reports. Also, what's helping matters is China announced that they're going to send a delegation over to the U.S. and resume talks over trade, which is shedding a positive light in the markets as well. So let's kind of take a look here at the bond market. In the bond market, as you see, we were way up yesterday. We were even up like 20 basis points yesterday, and then pulled back when the stock market kind of closed off of its lows, and the stock market closed off of its highs. So we closed just below this. Was it 200? Or I'm sorry, the 100-day moving average right here. And right now we're just sitting below this. Looks like here we got double. Looks like a double here. We got the 50-day and 25-day moving average. We're just sitting above that and just below the 100-day moving average right now. And currently we're down about a couple basis points here from where we left off yesterday. So we're kind of in this sideways pattern here. However, on the 10-year Treasury, we are down, and we're down up from where we left off yesterday. We're about 2.88 right now. But we're again down below this 100-day moving average as well as the 25-day moving average. So it looks like we're getting kind of a triple formation here with the 50, 100, and 25-day moving averages just above us right now. So that pretty much wraps things up. Rates are about the same as where we left off. There's really not much difference in pricing for interest rates from where we left off yesterday. Otherwise, if you guys want to get more updates, just come over to Twitter. You can find me at Mike Bjork on Twitter. and I do post updates over there as well. You guys have a great rest of your day. Thanks so much for watching, and we'll see you guys tomorrow. Bye bye.